Hey, welcome in everybody to Mining Stock Daily. In this week's long form episode, Trevor Hall here, bringing you my conversation with Andy Home from Reuters. It was a great hour-long discussion with Andy while I was in London to talk all things he's reporting on for his publication regarding the industrial metals complex, and really what an incredible time to be reporting on industrial metals, given a 50-point rate cut by the Federal Reserve and a couple huge stimulus packages announced in China, and everything was on the move. So it was an incredible discussion with Andy Home. Who better to have a discussion about the global metals market than Andy at the time like this? All right, special thank you to Arizona Sonoran Copper, Visa Silver, and Minera Alamos for their continued support of the podcast. No video on this one, just the audio while I was in London. So enjoy the listen. Have a wonderful weekend, everybody. We'll be back Monday morning. Be well. All right, well, no trip to London would be complete without a nice sit-down visit with Reuters' Andy Home talking about the metals markets. And Andy, it was about a year ago, we were at this exact same table, your first time on this podcast. And I remember you explicitly saying this is the most exciting times in metals markets you've ever experienced in 30 years of your career. And that was really on the back of this energy transition, push towards critical minerals, industrial metals, and the like. So maybe let's piggyback more on that idea, where we're at in the in that conversation. But we've also got to talk about these general themes of stimulus and governments trying to maintain growth in their developed countries and what that's done for markets, particularly the metals market in the back of China in the last week. That's been interesting news. But first, how you been?
Yeah, I've been well, thank you. Nice to see you again. So in the same spot.
Yes.
Yeah, the weather's a little bit more rainy this time, I think, than over the last year, right?
Yeah. It was pretty wet trip getting in here, but I actually secretly like it because it's been so dry in Colorado. It feels nice to get some moisture.
Well, I'm glad someone's enjoying it.
Yeah. Give us a sense. I mean, it's been a few months since you and I last chatted. General theme. What's really been popping up in your discussions and in your reporting here the last couple of months that's maybe been a shift that you weren't expecting?
Well, I think, there's a couple of things we could discuss there, but let's start off with the energy transition metals, right? Mm-hmm. And we're in quite an interesting spot from that point of view because, the energy transition is progressing. More battery plants are being built, right? More EVs are on the road, certainly when I go around London. But where are we? We've got lithium prices bombed out, nickel prices bombed out, cobalt prices bombed out. Mm-hmm. These are all three of the key battery metals that everyone was getting so excited about, right? Mm-hmm. So I think this is probably largely unexpected at the scale of the price drop. So you're going to say to me, well, hold on, Andy, how come we've gone from these being the most sexy metals in the world because of the battery, the EV revolution, to why are they all at distressed pricing levels? And there's a slightly different answer, or a different modulated answer in each case, but really it comes down to oversupply. There's been a lot of discussion, about the pushback on electric vehicles, particularly in Europe, and I think to some extent in the States, right? That is true to some extent. The pace of EV sales has slowed, and slowed in China as well. And part of that is not that people are sticking or buying new ICE, internal combustion engines. The customer turns out to really like the hybrid vehicle, the hybrid plug-in, right? Yeah. Which uses a smaller battery than a pure electric vehicle. And I think that's taking some of the edge off the demand wave, if you like. But from my perspective, it's a stepping stone, an unexpected technical stepping stone towards full battery electric vehicles. And by the way, this particularly applies to China. China also loves hybrid vehicles, apparently. This is the leading battery engine country in the world. So that's just I think changed a little bit the demand curve that's coming through, but the demand curve is still there, right? So the real change for me is what's happened on the supply side. And let's talk about lithium first. How come lithium's where it is? Well, if you go look at lithium over a 10-year time horizon, right, it has been a series of price booms and price busts. And anyone who's been following commodity markets for a while tells you that there's obviously a mismatch of supply and demand in that sort of market, right? So what happens, of course, is the price booms. And everyone suddenly goes running around saying, well, we're going to start mining for lithium. And of course, governments want that to happen, right? I mean, sort of like the European government wants everyone to mine for lithium. US government would like to have more lithium. But too much is brought on too quickly. It's as simple as that, right? And that's where we are. We're now at a stage that the price has fallen to a level that will force lithium producers out of the market. And I think one of the issues, in my opinion, that lithium has as a problem is this has been a largely unhedgeable market, right? Because only very recently have we seen the CME group start to have some success with its lithium contracts, right? But then go back a couple of years to that last price boom, right? In a normal market or in a fully financialized market, that would be investment would be accompanied by hedging. And if I'm, you're the miner and I'm the banker, you say, oh, well, Andy, can I borrow $1 billion to dig a mine? The first thing I'm going to say, well, maybe, but what are we producing and what price will we get for it? That has been an almost impossible question to answer in lithium because there was no forward curve that anyone could look at. What is the result? A lot of what I would call blind investment. A lot of high-end or high-cost production has come in, places like Zimbabwe. The Chinese themselves have brought lepidolite sort of deposits on, which would not be like economically viable at anything other than a very high price, right? So we've had this surge of production, and a lot of it has really gone into pretty high-cost production assets. And obviously what we're having now is we're going to weed those out through a period of low prices, yeah? Let's turn, say, for example, to nickel. And again, the issue is really not so much, nickel demand growth rates are still really strong, right?
Right.
6 to 7% a year, that's not bad for any base industrial metal. What's the problem? Chinese have overinvested in Indonesian nickel production, encouraged by the Indonesian government, which wants to be a powerhouse of nickel production, right? But again, the amount of investment that's been poured in, the amount of new capacity that's been started up in India is simply crushing demand. Even if demand's good, it's been crushed by this new supply coming on, right? And I think one of the things that's really changed probably since the last time we may have talked about nickel and Indonesian nickel specifically is previously, sort of in the first phase of this kind of like boom time in Indonesia, they couldn't produce pure quality refined metal. They produce intermediate products, ferronickel, nickel pig iron. Some of it flows into the stainless steel industry, including in Indonesia itself now, and a lot of it was sort of shipped to China, also to go into their stainless steel sector. About a year or so ago, Chinese-led Indonesian groups made the technical breakthrough of being able to take what is pretty low-grade Indonesian resource and actually transform it into 99.8% pure class 1 nickel, we call it, which is deliverable to the London Metal Exchange. So if you like, previously this oversupply was slightly masked because it was happening at parts of the industry which were not particularly visible. They don't trade, the London Metal Exchange doesn't trade ferronickel, it doesn't trade sort of like nickel pig iron, right? But now, of course, that they've got this ability to produce metal, it is showing up every day in London Metal Exchange nickel stocks, which have just gone higher and higher and higher. Guess what's happened to the price? Lower and lower and lower. And that comes with a byproduct, quite literally, because those Indonesian plants and the deposits tend to come with a lot of cobalt. So, we go back 2 years, there was only one cobalt producer in the world, right? The Democratic Republic of Congo. No, there's two now. There's the DRC and Indonesia. And that Indonesian cobalt is just running off the nickel production. The more nickel they produce, the more nickel cobalt byproduct they're producing.
It's a byproduct of it. From the HPAL, the high pressure acid.
Absolutely, right? And interestingly enough, I was just listening to a presentation this morning. So the swing producers, the artisanal producers in the DRC, they've almost stopped producing cobalt,
really?
Right?
Huh.
Because the price is too low. It's as simple as that. They're probably they shifted to sort of like produce a gold or something like that now. So that just tells you that the landscape, the production landscape, not just in nickel but in cobalt as well, is being transformed by what's happening in Indonesia. So linking all that together, yeah, we got all these battery metals that bombed out prices. Why? Too much supply too quickly.
Yeah. I was listening to an interview with Fast Markets and Andrea Hodder. I know you know her well, and she's been on the podcast once before. But the president of the LME was her guest, and it was really interesting. This is a little bit above my pay grade, and I'd have to do a better understanding and educate myself on how transactions and contracts, new contracts, are actually built and delivered to the traders on the LME. But in the discussion, he was talking a lot about kind of that LME metals passport and knowing where the metals came from. And really want to ask you kind of, with the HPAL process in Indonesia, it's not without its scrutiny, right? And even in the West, we've seen reports of loss of life, environmental disasters, and you would think that reporting would have an impact on Western consumers of the metal, but it certainly doesn't. Like it's yesterday's news, very quickly. And so, is that at all going to face even more scrutiny as we continue to move forward and have this like ESG type of mandate on everything, including our metals?
Well, I think it will. I mean, but we're in such as the momentum of what's happening in the nickel market, right? So you say you're a nickel buyer, right? Mm-hmm. And your job is to go and procure X amount, let's say a couple of thousand tons per year, right? And you go, well, I'd really like to buy some like green nickel, right? Now, first off, you've got a problem because a lot of green nickel producers in the West have closed. BHP closed its Western Australian nickel operation, big producer of pretty like good compliant, ESG compliant. So you've got an immediate problem. Your available pool of what I would call green nickel has shrunk. Secondly, as all buyers, you want to get a good price, right? Because you don't want to tell your boss, oh, actually, I bought quite a lot higher than the market was. So I think there's an element of, you're increasingly faced with a choice of one or two suppliers, which is Indonesia or China, and the Chinese are getting their raw material from Indonesia, right? But you're absolutely spot on, and I think this is a bit of a ticking time bomb, I think, for the nickel supply chain, because as you rightly pointed out, there is a big ESG problem with Indonesian nickel. And let's not tar everyone with the same brush. There are one or two very good, what I call green nickel producers in Indonesia, but most of them aren't in the way that we would probably deem them to be green. And we're not just talking about carbon footprint here, we're talking about deforestation. We're talking about sort of water tailings management. We're talking about, indigenous sort of like relationships. We're talking about worker safety. So, where do you start almost? And I think this is one of the big problems. There's a lot of parameters we would put into a statement to say that a certain metal is green. Indonesia fails most of them, but here's the other thing. Most Indonesian nickel companies won't even give you the basic data that you're looking for. You go and ask them what their carbon footprint is. We don't have to tell you that. They don't, right? And I think such has been the speed of growth in that industry, led by Chinese entities, right? When you even start to say, well, how would I differentiate? What is green nickel? You've got a large section of the world's production now has zero transparency for you as a buyer, even to start thinking about it, right? So you can look at a carbon footprint. That's maybe the easiest way to start, if you think, because that is something that most are moving towards, sort of like, providing data on. But when you want to talk about, deforestation, a lot of, you have to have a buy-in from the producer community to provide you the data for you, the buyer, to make a rational assumption about whether I want to go this sort of nickel or this sort of. What if they don't? And that's where we are at the moment. And there is a problem now, I think, because from 2 points of view, right? So first off, from a car company's point of view, if you're buying Chinese or Indonesian nickel, you have likely a complete sort of like you've been sort of like blindsided by what your ESG is. You actually don't know, right? Mm-hmm. The second issue, and this is kind of particular for something like the United States, right? So if I want to get my subsidy on an EV vehicle, of course, it has to conform to a certain sort of set of criteria where I've got the metal, and the foreign entity of concern comes in. So let's remind ourselves that most of the Indonesian nickel industry is operated by who? The Chinese. So how are you going to get IRA compliant nickel with, again, you're back into a very small pool of potential suppliers, right? And I do think this is a potential, ticking time bomb for automotive companies in particular. How can I have a green car when it contains metal from this sort of background? So to some extent, we're going to have the same conversation in nickel that we were having about cobalt 5 years ago because of the artisanal mining issues in the Congo, right? Yeah. And the cobalt's obviously, has suffered as a result of that. I mean, a lot of people are trying to engineer cobalt out. They don't want the reputational risk. Ironically, to engineer cobalt out, you need more nickel. So you can see what's going to happen here, right? You see where my thinking is. So at the moment, at least we're not using child labour for it. Yeah, but guys, what else is going on in the production of this nickel? And if you as a consumer-facing brand, whether you're Volkswagen or whatever, you may have a problem with this. But such are the economics of the nickel market at the moment. As I said, if you were the buyer and you wanted to go and say, oh no, I want proper ESG compliance, there's not that many people left who can supply it to you because such has been the wave of closures of existing producers in the West. And of course, new projects can't get started, right? That's the other problem. If you need an incentive price, to sort of get your nickel mine going, we're trading below that. So you've seen a lot of sort of people push back on projects and all that. So the dominance of let's call it the Sino-Indonesian nickel industry just is growing all the time. This is really not a great outcome for anyone if you think about it. The only positive I could say about it is we have now reached a price level when even the Indonesian producers may be struggling to turn a profit, right? Or some of the smaller operators and the newer operators. So, they can't defy the laws of the market, but, their production cost is so much lower than everyone else's. When we say they're struggling, that means everyone else in the world is struggling, right?
Well, in those dynamics and those contrarian events when the likes of the BHPs and the big miners start shutting down nickel projects, if you are active trading and you are that contrarian, that would be a huge sign that perhaps we found or getting somewhere close to a bottom, and the solution for low prices is low prices, right? And so to bring more production back on, prices need to go up. In fact, I've heard similar stories on the lithium side, lithium producers shutting down operations. So therefore you can play the same hand that has been dealt, low prices, fix low prices, and therefore the lithium price has to move up in order to get production back up. And you can exchange any metal in the market with that type of scenario. But where I'm a little bit concerned is this heightened geopolitical tension that we are surrounded with right now.
I was going to say that's the second thing that's changed, right?
Yeah, exactly. And so if it was an East versus a West type of scenario, God forbid, it'd be very easy for the likes of the Chinese to just say, we're stopping the supply of these metals to the West. But at the same time, the West has done so little investment in these resources, they can't turn anything on the next day. In fact, they couldn't turn anything on in the next year. So how are you watching that landscape, the geopolitics of everything happening right now? I know that's a very loaded question because it changes every day, but it is a very serious question that provides a lot of thought, not only with people in the markets, but also, the politicians and the people running countries.
No, absolutely. So, just in the last month, I've kind of written about two metals that I don't normally write about, right? The first one is antimony. So why is Andy Home writing about antimony? Because the Chinese have just put export controls around antimony shipments. As always with these minor esoteric metals, they are the world's largest supplier. Controls doesn't mean yet that there's no antimony going to flow out, but it's kind of a warning shot, right? It's just a warning shot saying, okay, do not assume the free flow of this metal from China going forward. And that follows in the footsteps of gallium and germanium, which we had last year, where they put export controls on. So, one element here is what China is starting to sort of really flex its metallic muscles, particularly in the smaller esoteric markets. By the way, in case you don't know anything about antimony, and I didn't until very recently, right, it's mostly used as a flame retardant, right? So who cares? You say, but here's the other thing. It's used to strengthen the glass in solar panels, right? So just in tiny amounts, but it's a key input to the energy transition. So you can see China is sort of ratcheting up the pressure, but equally so is the United States, right? Because it's sort of like raising duties on Chinese imports of lots of metals and minerals, right? Now, no one, we're still in the foothills of this competition. These gestures, if you like, are coming in at very arcane, very small-sized markets, right? Like antimony or gallium. We're not yet at the stage that China's going to turn around and say, well, all that lithium you'd be getting from us. We're not at that yet. But I mean, obviously, on the path that we are on, it's not inconceivable. Mm-hmm. Now, the second thing I've just written about, which I haven't written about actually for about 7 or 8 years, is titanium. Mm. And here we go to Russia, right? So I think it was a couple of weeks ago, Mr. Putin, in one of his kind of public sort of like Q&A sessions, suggested to his officials that they might want to consider capping exports of stuff that Russia has a lot of. Nickel, uranium and titanium were the 3 that he mentioned. So you can imagine what happened to titanium prices, for example. Nickel actually is very interesting because 2 years ago, the invasion of Ukraine, the nickel price went wild because of the threat of losing Russian production. Actually, this time around, the nickel market shrugged. Why? We could get it all from Indonesia now, so we're not going to worry about that too much. Uranium, of course, is its own complete sort of like different story. Titanium, 2 years after the war, our aerospace sector has not broken its dependence on the key Russian supplier. Despite all the sort of the tariffs and the sanctions, right, neither the United States nor Europe has put any sanctions on titanium products from Russia. And here's the thing, the only country that did was Canada. And you know what happened when they did? Reuters has reported this. Macron himself rang up Trudeau and said, you got to give us a waiver for that, because without these products, there's going to be no Airbus, right? So that just tells you how sensitive we still are to Russian titanium exports. So now we've got a double sort of issue here. We've got the competition between China and the United States and Europe, and of course Russia itself using metals, if you like, to sort of like to threaten the West. So yeah, it's a very complex and evolving landscape, and this is really playing out, as I said, in the more obscure parts of the alchemical table. But bear in mind, America has pretty much banned sort of Russian aluminium. So again, the way I look at it is, a man of my generation, my younger years were basically in a context of energy competition, right? It was the fight for oil, and all the Middle Eastern politics that went with that. The wars and going back in the 1970s, were still in competition globally for energy, but of course the energy transition means that we're not fighting over oil anymore. We're fighting over the metals that will be the energy metals of the future. See what I mean?
Well, it's not just the energy metals, but it's also wartime manufacturing metals. Obviously antimony's had you say antimony, I say antimony, tomato, but there is that defense aspect to the metal, and we've seen the Stibnite project in Idaho that had tens of millions of dollars granted to it over last year, and then just last month they get the green light from the Forestry Service to approving the mine. So that was a huge step, and it was almost it was one of those things. And I remember being at the PDAC conference a year ago, and I presented this piece called Just Follow the Subsidies, and you could start seeing where the money from the federal government was going into these critical minerals, either for energy transition but also for defense. And when the DoD is giving money to a specific company with a specific project, it felt like the odds were good that they were going to get their permit to go ahead and build this thing. We're not there yet, but it's obviously got a huge thumbs up of approval. But in order for the government to allocate that much capital and then at the end of the day have another agency say no, it would be mind-boggling. It would just show you the biggest waste of federal taxpayer dollars in natural resources. But of course they were going to get permitted because they need it. It's such a critical metal in a local spot, a geographically located place to where they can mine it and then use it for its purposes. What are you seeing from governments, maybe in the West, maybe even the East, as far as further allocation of federal tax dollars to move projects forward, to answer the supply gaps that are certainly going to be there and probably even be widened if there is a geopolitical issue at hand?
No, absolutely. And you're right. The Department of Defense, Department of Energy are kind of now become lead investors. They
were capital allocators in the last more so in the last 3 years, when the markets in Canada, the resource markets in Canada and U.S. were absolutely void.
Right. And Europe is very much set on that same path. But you're absolutely right. The point is you've got such a minimal starting base. Essentially, what are you trying to do? Think about this now. You're going to say, whether it be in Europe or the United States for that matter, you're going to try and create an entire supply chain. This is not just about mines, right? It's about mines, it's about processing plants, it's about battery precursor plants, it's about then battery assembly plants. And what you've seen, and I don't think it's any coincidence, is the money going into the downstream end has proved to be much more efficient than the upstream end. We have a lot of new battery plants being manufactured, right? But where it gets sticky is at the very, very other end of the supply chain. It's the mines. It's the mines. That's the problem. It's the problem in Europe and it's the problem in North America. It's the problem in the States as well, right? And it's not just, permitting is a really big part of it, right? But permitting, why does permitting take so long? That is, that's pushback from local communities who don't want mines anymore, but it's also lack of skill sets. If you want to build let's say you want to build a rare earth processing plant, right, which is happening at the moment, who's going to operate it? When was the last collective experience of operating one of those? How many university courses are for that sort of skilled engineering? And I would say Europe actually lags behind even the United States in that point of view. That's the forgotten part of the supply chain. Yeah, we can pump money into the ground, right, and dig it up, but who's going to process this? Well, we can't send it to China, can we? Where's our skill set in the West? Because it's been so long since we did this sort of thing collectively, right? It's been so long since sort of like a university sort of like encouraged sort of like that sort of engineering course. Right. Not in China, not in Indonesia, where guys are rushing into that because obviously they're looking for skilled engineers. That's why it's not, permitting is part of it, but it's also collectively relearning the ability to mine and to process. And obviously, what the US is doing, I think correctly, the DoD is trying to punch through, some of these barriers. And it's quite clear it's doing it where it's most sensitive. So we're talking about rare earths, we're talking about tungsten, the very, very more, I would say, military end uses than maybe civilian end uses. Although obviously where the military goes, the civilian end use sort of benefits as well. But that's our problem, right? I'll give you another example from Europe, right? So Europe is sort of, we don't really have at the moment any lithium supply chain at the mining level, right? We're building battery plants, but where are we getting the lithium from? So in this context, Rio Tinto found one of the biggest lithium deposits ever in Serbia, right? Because of the Jadar project. It sort of faced mass sort of street protests a couple of years ago, and the then government in Serbia went, no, we're not having a lithium plant, right? I think the European Union has lent on the Serbians. It would be really useful, guys, if we could get this mine going, and maybe you just even get some manufacturing sort of like credits from us. I mean, you could start up your own battery centre. Yeah, absolutely great. The latest poll I saw, 2/3 of Serbians are still against that mine. Yeah. You cannot build a mine with that sort of local opposition. It's just not going to work for you. However much your government wants you to, if there is that sort of like mass protest against you, we have a big problem here. And it's really, again, it's partly because, Serbia has always been a mining country, if you like, but there's not been much happened recently. Rather, their experience of mining is kind of from almost the Soviet days. So think about leaking tailings dams, bad sort of like land management and all that. So the collective memory is, no, mining bad. And that's the biggest single challenge, I think, for the mining industry in both the United States and Europe, to say, whoa, this mining bad thing, not necessarily. We're going to be, that's an educational program required as much as anything else. Having the dollars to invest, having the government saying, yeah, we really want that mine in Serbia to open, that's exactly what Europe needs. It's not enough. Yeah, and that's our problem, right? We've got to educate a new generation to be able to operate mining and processing plants, but we've got to educate people that, hold on, how do you think you're going to go green, guys? Someone's got to have these mines, and we are not the dirty guys from the past that you remember us as. And it takes a lot of work, right? And if you look at most of the projects that have been stalled in the United States, you're looking at a very similar dynamic. Our last experience of mining was not good. You polluted this, you polluted that. Why would we allow you to come here and do this again? That's the ongoing conversation that has to happen, right? I mean, I think mining is probably the biggest challenge, if you like. It's not, why is permitting take so long? Because of that opposition to mining, right? If there was no opposition, you just kind of like go 3 years through, right? I mean, there are very specific issues with the way that the federal mining law is structured, in my opinion, which kind of encourages a prolonged legal action. Yes, they can do something about that. But there's a bigger issue. If you want to cut your reliance on countries like China, on countries like Russia, you've got to sort of like, you can't just build the battery plants. You've got to build everything from scratch. Yeah.
That news out of Serbia was really quite interesting, because it was almost like a complete head fake within 48 hours. One day it seems like they get approval, then the next day you see thousands and thousands of people protesting it out on the streets, and you just kind of knew what's happened. Oh, go ahead.
No, you've got to accept that. Every individual country will have its own dynamic here, right? So it may not, the environmental protests, if you like, may fit into a broader oppositional dynamic. And I think you saw that very clearly with the Panama copper mine, right? So, which we know was forced to close because of environmental protests. But I think just to say that was environmental opposition doesn't quite capture how that mine kind of sat within the broader opposition to the government. So it became almost symptomatic or symbolic, if you like, of why people were angry with their own government. Yes, there were issues around the mine and the permitting of copper Panama, absolutely. But it coalesced into something much bigger, right? Mm-hmm. It coalesced into almost like bringing the government down sort of level of opposition, which is sort of how the dynamic, I think, is playing out around the Jadar mine in Serbia. Yes, there are issues around the mine. Yes, there are NGOs involved. But it somehow has touched a national nerve and has coalesced into something much bigger than a single mine. And that's another problem for us, right? Because it's very easy to say, and I think Rio Tinto is now going to engage on what they call mass education program. It's got to be done, but there's also that extra dynamic there, which you've got to be able to read the local politics, if you like, of the country you're operating in, which is something the miners have not been particularly good at, right?
Yeah. Well, I mean, my follow-up question was, what does Rio Tinto do following this? And you said maybe big, massive education campaign. That could be part of it. Or do they go shopping? Could they go, acquire another big company, a production company that fits that lithium criteria?
Well, they have got their eyes on an Argentinian project, which I would call their plan B, if you like, okay. Right? Yeah. But I mean, it is, from a European perspective, I mean, very similar to the same perspective of the United States, right? We really ideally want to have it on, on our soil, if you like, or very, very close to home, right? You could say, well, Argentina is a sort of like mining-friendly country. It's kind of like in the broad scheme of things, we'd probably call it a friendly country. But here's the thing, it's still got to be shipped, right? Mm-hmm. And we learned from COVID that, I mean, shipping stuff around the world to be processed is easily disrupted. So the ideal is still to have it on your soil, or as close to on your soil as you possibly can get it, right? I think one of the things you can do, I mean, it'll be very interesting to see whether Rio's public education program, how that goes. I think they already have done, and I think it's become more standard. I think one of the quid pro quos an investor in that sort of like greenfield project can offer is say, okay, you've had a bad experience in mining, show us. Maybe we can clean that up for you, for free as it were, as part of the package, right? Show us your leaking tailings from the old copper works. Maybe we go in there with our expertise, and actually as part of your package, not only will we bring in a clean new mine on, maybe we can help with your dirty, toxic legacy. And I would expect to see more of that sort of like deals on the table, which makes sense, right? It's kind of how to address your underlying, why do you not want us? Because look what you lot did up the road last time, what if I clean that up for you as well? And by the way, when I clean that up, I might find some more metal. Mm-hmm. Yeah. Right, yeah?
Right. Well, actually, the mergers and acquisition discussion is probably pretty poignant here, since we somewhat dabbled and stepped into it. There's been some big deals this year, and we are seeing mergers get done. We've seen mergers being proposed that are not getting done. Are the major metal producers, are they done kind of acquiring projects, acquiring other companies? Do you see more coming down the pathway? Because at least on the on the precious metals side, and maybe on the copper side, it seems like the M&A news is starting to trickle down into the mid-tier, or maybe like further down the road develop type of projects that we know are permittable, can be ready to go, and a major can come in there and build those things. So where are we at in the M&A cycle?
Yeah, I'm probably going to be slightly controversial on this from the copper point of view, right? I mean, M&A shouldn't be a replacement for developing your own copper deposits, because every time I go to a metal seminar, what I get told, there's not going to be enough copper. Mm-hmm. M&A per se, particularly at a top tier level, doesn't give me more copper. It gives me more copper as a company, but I'm not mining any more copper, right? Yeah. And to some extent, it makes me worried that, hold on, have we given up on finding the next generation of mega projects? Is that what the M&A is about? Does a major sort of mining company, what you haven't got anything you can develop yourself? This is your speciality, right? Because sometimes it looks like, you're just buying someone else. It's an admission that you haven't got anything in your pipeline. And that's not necessarily contributing to closing the future supply and demand gap, right? So I know everyone gets excited about it in the equity markets, but actually from a pure resource point of view, I'm not sure whether that's the most efficient use of capital. Maybe where are the big new projects, right? Or are they in places that you don't want to go? I mean, which may be the case in the Congo, for example. So I think sort of what these markets need is kind of like the tier one producers to be, you are the guys that we've looked to in the past to bring on the tier one assets. Just buying a tier two asset is not really, what we expect you to be. We expect you to be doing more, right? You can list the assets of Rio Tinto, it's mega mines and Oyu Tolgoi. What you should be doing, guys, from my perspective, is I want more of that. Oh, it's really difficult. We've got a long permitting process, but we're just shuffling the deck a little bit. It looks good for your share price, maybe, if you buy up a couple of juniors. But I mean, you still got to develop the mines, and they're maybe not tier one mines anymore. Yeah. Because you are the guys who have always brought the tier one mines on. You, the BHPs and all that. So I get a little bit nervous about sort of the focus on M&A activity because, from an individual corporate stance, of course, it can make a lot of sense. We want to bulk up, say, in our portfolio of copper assets. But, you're often buying stuff that's undeveloped. The hard work's still to be done, and to some extent, you're not solving the short-term issues here.
And on top of that, you're adding more risk onto your portfolio.
Yeah,
right.
Yeah.
It's absolutely fascinating because we kept on having this discussion this week about the next big project. Obviously, the Philo deal is done. That's off the books. That's going to Lundin Mining and BHP. But we're trying to have a hard time figuring out, okay, what's next? What's the next obvious big copper project? And it's a little bit challenging to come up with something that has scale and grade. That combination here. And so you'd have to kind of go down the list, and you can find big scalable projects, but the grade is relatively low. And does that mean that the copper price needs to go up to support those lower grade projects to make those viable? I mean, we've seen studies, we've seen technical reports, NPVs and IRRs that seem positive, but at the end of the day, the lower the grade, the harder it is to maintain profitability in those projects. So if the grade's not there, what is the likelihood that the price needs to rise in order to just meet and make equilibrium with what's on the pipeline?
Yeah, I mean, that's commodity market 101, right? I mean, absolutely, you're spot on. But I'm going to push back a little bit on this industry consensus, right? Yeah, we can't find the big mines with the grades. Whoa. They're there. They're not where you want them to be. I'll call it, the clues in the name is called the African Copper Belt. Mm-hmm. You look at some of the stuff that's been brought on recently in the DRC, right? You want high grades, these guys can go off the scale on your grades. 4-5% copper at scale, right? You look at the ramp up there from, Kamoa Kakula, right? Yeah. It's a mega mine. They're digging a fantastic resource, right? There is a lot of copper at that grade in the Congo. But that's the problem, isn't it? It's in the Congo. That's the problem. And a lot of the majors don't feel they want to navigate the issues around the Congo, right? And that's a slightly different issue. Because is that one a price? Or is that one like, no, we're just not going there, right? Mm-hmm. But that, this idea that, we've run out of great copper resource, it's still there. It's called the African Copper Belt, right? It's there in the DRC, and to some extent it's there in Zambia. What you're talking about then is, certainly at a tier one mining company point of view, is a reluctance to go and invest in that environment, in that particular couple of countries, right? And I think that's where the United States is quietly working behind the scenes. I mean, the Congo is kind of like a modern day version of the great game between Britain and Russia over the access points to India, right? Mm-hmm. And what do I mean by that? I would draw your attention to a project called the Lobito Corridor Project, right? Which is to build, or renew in some cases, a railway line linking Lobito Port in Angola right into the African Copper Belt. What they're trying to do is de-risk the Congo. You see it in those terms, right? Well, we can't change the Congo for you, but tell us what specifically problems you might have investing there. Well, how do we get the stuff out? Rickety old rail lines. What if we actually kind of built a new railway line right into the heart of the African Copper Belt? Would that help? And you're starting to see that sort of like a more lateral thinking. And I think that's a very interesting one. By the way, the Chinese, who control much of the copper and cobalt resource in the Congo, are fighting back. They're planning to upgrade the eastern railway line, which goes over to the Mozambique port. But from DRC's point of view, you're in a win-win situation. So I think that's something I would kind of... So first off, the copper is there. It's just not where people want it to be, particularly at the top tier mining companies who do not really want to take on the operational risk and the country risk of being in the African Copper Belt. But then look at what the US is trying to do of help de-risk the infrastructure around there. Another big thing, for example, would be sort of like, the Congo has massive hydroelectric capacity because of the Congo, right? It's not ever fulfilled that capacity, lack of investment and all that. Expect to see movement in that space. Again, how could we help? Well, we've got power issues. The power keeps cutting. Well, what if we could need an investment package to finish the Inga Dam, sort of like, I mean, would that help? Yes, that would help. So you're seeing the government is working in slightly oblique ways because they know where the copper and the cobalt is as well, right? If you want to find a big, clean source of both cobalt and Congo, it's in the African copper belt. And how could you go about de-risking it for private investors to have more confidence investing there? So I would say the railway project, Lobito, is kind of a key part of that strategy. Giving them the investment to like build up the hydroelectric capacity of the country. You're sort of trying to de-risk the logistics. There's going to be other issues there which may put people off, but I think that's the one that I'm really looking at the moment because there is a solution there, right? As I said, some of the grades are still like phenomenal relative to pretty much anywhere else in the world, right? I remember when Freeport McMoran first got involved in the DRC, they sold out since to a Chinese company at a place called Tenge Fungurumbe.
Yeah.
And I remember sort of being on a conference call with their management, and they were taking a few questions, as you would expect. What are you doing in the DRC? Is that wise, guys? And I remember them saying, but you've got to look at the concession we've got. We can build 100,000, 200,000 ton per year copper plant, and we're going to probably use 1,000th of the concession we've got, because the rest of it is all copper. Right? Now, for very different, that's a long story as to why they ended up sort of not being able to retain that asset.
They got into the oil market.
Yes, you remember it very well, right? So, there was a very specific story behind that. But that always stuck in my head, right? It's going, of course, they've got 1,000 square mile concession. What they're going to build is just sitting on one tiny part of it. Mm-hmm. What's in the rest of it? Because it's called the African Copper Belt for a reason, yeah? So I think we've got a mismatch. So the tier one companies, the BHPs, the Rios, they know what's there, but from their point of view, whoa, that's just way too risky. This is not the profile of what our shareholders want us to do and all that, right? So it's been left to second tier companies for this, and of course the Chinese who moved in en masse. Everyone's been drawn in by the same resource. But as I said, there's a bit of a great minerals game going on around the Congo now. It's being sort of like it's manifesting who's building the better railway line. It's the Chinese one to the east, the Western one to the west, right? Can we get them their hydro capacity up? And bit by bit, could we make this an investable country for the biggest players, the biggest mine companies in the West? I mean, because they won't go there. They've shown us they will not go there off their own, sort of like that, right? So what could we do, with the US government in this case, what could we do to help this? And I think that's playing out as well, right?
What about, there's a couple other areas of the world here that's starting to get a little bit more attention. Central Asia, Kazakhstan's obviously that exploration, those big land of porphyry giants, or a lot of explorers, kicking around rocks there. That's been pretty interesting to watch the last couple of years. Southeast Asia. South Asia looks pretty interesting. Kind of around Malaysia, even parts of Indonesia, that whole Ring of Fire area that I don't know if it's been forgotten, but it's just definitely very challenging to explore there. But are you seeing any other jurisdictions or areas of the world that people are starting to maybe revisit that maybe have been forgotten here?
I think Kazakhstan's a really good example. I mean, one way you can track this is to draw up a list of bilateral agreements on minerals between either the United States or Europe. And who are they signing those agreements with? Kazakhstan's on that list, by the way. Serbia's on the list for obvious reasons, right? You can almost use those agreements, those bilaterals, to say, that's where our governments are looking for the potential, right? And Kazakhstan does feature quite a lot. I mean, it's also useful for uranium, of course. I mean, since we're getting a little bit worried about Russian uranium supply now. No, absolutely. And you can almost track where the deposits are by where governments are signing agreements on bilateral with the emerging country governments. They're all about basically, we think you've got some interesting deposits. Could we have some sort of arrangement here? I mean, that's being, and I think that's also, I mean, that's part of a process, because as the United States government has made very clear, the European Union government's made clear, ideally we want it on our shores, but what if you can't have it? What's your friend shoring? And those are the countries that are cropping up. Argentina, obviously, for lithium. I mean, it's a good time for some of these countries at the moment because they're being courted both by West and by East, right? I mean, because of their
Saudi Arabia is in the perfect storm.
And Saudi is, of course, I mean, absolutely a great example as well. I mean, I think there's a lot of potential there as well. And again, you know, it's slightly unknown potential because this is the world's largest oil producer. They didn't really spend a lot of time looking at their mineral deposits.
Mm-hmm.
They didn't have to, right? Mm-hmm. And they are now. They absolutely are now. It's kind of, what else have you got there apart from oil? Oh, you've got quite a lot of stuff there apart from oil, right?
Yeah.
So yeah, you're absolutely seeing that this is the, yeah. I think there's as I said, going back to our early conversation, building new mines in Europe, building new mines in the United States, it's going to take time. We have lots of problems around that. What's our next answer? Let's look around the world and see who's on our side, as it were, and who's got something that would be of interest to our supply chain. I completely agree, yeah.
Our time's running short, but there's still kind of two ideas I want to hit on. I got to ask you about China and the Chinese stimulus and the market reaction. I mean, the general market reaction was, you know, boomtown. Euphoria. It was amazing to watch those 2 days following that announcement. But some of those industrial metals started running higher. Iron ore was up 10% last I saw. I think aluminium was trading really well following that as well.
Copper got to $10,000 per ton again on the news.
Yeah. I guess, you know, and I'm sure you had a number of discussions in the last week based on this stimulus announcement from China and what it means for the metals. And what can you kind of share with us about, you know, what this means going forward? And my question is, we've seen China stimulate, you know, softly stimulate a couple times this year, and it hasn't really worked out well. This is a huge stimulus package, but I guess the follow-up is it still going to be enough?
It's a great question. I mean, and you know, one of the things, I mean, we've seen the market reaction, and that was led by the Chinese stock market because there was some specific measures announced there. Basically, I mean, it's sort of like, putting a put on the market, a put option on the market. I mean, putting a floor underneath it. But you know, my inbox is full of emails from guys who know far more about the property sector and macroeconomics than me, saying, hold on, let's just have a second look at what they're doing here. And I think the second take is, okay, you have understood how serious an issue you have in your property sector. And this has been running, this is not news, this has been running for 3, 4, 5 years, right? And it's not stopped deteriorating. Mm-hmm. Yeah? So this kind of like awesome package, if you like, I think is just to try and stop any further deterioration. That's a really different thing from reboosting the sector. I mean, because if you think about it, how would you reboot the sector? Well, what are you going to do? Build more property? That's your problem. Well, yeah. That's your problem, right?
There's no capacity. So.
That's your problem. You built beyond immediate demand, right? So I think, yeah, it is obviously, for me, it kind of is almost an admission of how bad things have got.
I couldn't agree with you more.
Right? I think that's the second take from, not necessarily the markets. The markets will do what they want to do. They've got the momentum now. The copper bulls will be like copper bulls always, right? But I think the second take that I'm reading is, whoa, this is really bad then. You're just even trying to stop the floor kind of like sinking further here, right? Putting a floor underneath something is not the same as kind of like a reinvigorating or reboosting it, right? This is really just about limiting more downside, and that's not necessarily a great message going forward, is it?
No, I don't think so. And in fact, it's kind of my follow-up question is very similar in line with these. Okay, so if you're stimulating, trying to reinvigorate the economy, what are you trying to reinvigorate? I mean, obviously you have a middle class, and that needs probably a little bit more support. The upper class in China is like doing just fine as being part of the Communist Party. But you know what are they going to build? And if they are going to build something, where's it going to go when the rest of the world is stuck?
So I think, and again, there's far more knowledgeable people who've gone through that sort of fiscal stimulus package, sort of like line by line and so on. I think the scale of the problem is also manifest in they're talking about. I mean, China doesn't really have a social welfare system in a European sense of the word. I mean, I know the US has a different model as well, which basically means that sort of like, if you lose your job there, it's quite tough, right? They put in measures there to sort of like, to help people. This is really about giving the Chinese consumer confidence back to spend. because at the moment the Chinese consumer's in a bad place, right? I mean, if you do have any wealth, accumulated wealth in China, the chances are it's in a property market that is declining in value every month you look at it, right? Or if you don't have wealth and you've been laid off, there is nothing there for you. There's no way, there's no safety net, if you like, right? In both cases, you're not going to go out and spend more, right? And that's your core problem here. So China has long said we want domestic consumption to become the driver, not infrastructure investment, right? Absolutely spot on, guys. So this is about trying to rekindle consumer buying interest in China. And that's a tough thing to do. I mean, and that's why we fit in. So the first thing maybe we could do to make you feel more confident is, what if property prices could be made to stop falling? That's where we're at. Because we can't necessarily promise you at this stage a rebound, but if we could just stop the rot, would that make you as the consumer feel a little bit more confident maybe in going out and buying something, right? But as I said, this is about stopping further deterioration. As I said, the previous Chinese government's knee-jerk reaction to this is, hey, let's build some more property. Whoa. This is no longer the answer. And this is the problem. You've done this, every time that economy slows down, what should we do? We're going to give it to the local governments, they'll buy some land, and here we go, Construction sort of is great for your GDP, sort of like it fuels the aggressive selling of property. So a lot of Chinese middle-class families will not just have one property, they'll have, they probably bought one for their child, they may have bought a couple on spec as well. But if everyone's done that, who's going to live in all this stuff, right? So what they're trying this massive re-engineering towards, we can't just use that as our answer anymore to slowing growth. We need you all to spend some more money. To which I think the answer has been, we will do when we stop losing money on our property portfolio, right? And you have a real disconnect there. It's even Western governments sometimes find it hard to stimulate consumer spending if they don't want to, right? So I completely get why the markets have reacted euphorically to it. But I'm also looking at that, what I call the second take on it, from a lot of better economists than me, saying, guys, it looks great, but you've got to think about what it's intended to do, and at the moment, just to stop a further deterioration. Is the Chinese consumer going to go out and spend like mad tomorrow? I don't think so. And I don't think they think so either. So this is going to be a series of measures to try and shore up consumer confidence. And at the heart of it sits property pricing. Because that's how most Chinese, if they have got any accumulated wealth, that's where it's sitting. And it's been losing value for what, 2, 3, 4 years now, right?
Right.
And no one in that situation is going to go out and spend and buy a new car, right?
No, because they just bought it 2 years ago. They bought that EV. I think we're gonna see this play out in the coming weeks and months to kind of get a better sense of if this is enough. Obviously, it could be very detrimental to people who saw this news. Animal spirits are alive. They went all in. Plus, at the same time, we're getting that 50 beeps rate cut roughly the same time by the U.S. Federal Reserve. And so you just kind of wonder if it's almost too good to be true. But obviously, we'll wait and see. We don't have our crystal balls out. My final question, and I know you hate getting asked this, but I have to ask you because it's been such an incredible year for gold, but just the physical gold trade of Eastern governments stockpiling the metal. And I know you don't follow the precious metals trade, you're more of an industrial guy, but what's sort of it's hard not to ignore to watch that movement of Eastern governments and central banks stockpiling. And we're just finally now starting to see Western investors take a look, but not in mass tract as Eastern investors were. I guess any sort of insight on the gold trade the last year that maybe has caught your attention, knowing you probably weren't going to write about it, but
yeah, I mean, look, it's something. Gold is kind of, I suppose, historically the star hard asset. Yeah, more so than copper, more so than any of the metals that I cover, right? What you've seen is, it's the hard asset, as it were, in a very, very uncertain world, and I mean that both politically and financially. I guess that's what we'd expect gold to do to some extent. What you'll see, what I'm also looking at, is the catch-up move in silver. right? Yeah, that is a catch.
Well, then what's the industrial component of silver done for its price?
I mean, well, the industrial component is actually a really good narrative for if you're a silver bull, but I've got a feeling it's got nothing to do whatsoever with why people are buying it at the moment, right? Yeah, I mean, and it's very interesting because we had we had a rub off on this into the industrial metal space in the around March, April, May, which is when copper got to its new all-time high, just about $11,000 in a London basis, right? And there was something about that rally. It was really driven by fund money, and that's a really big catch-all expression, but I'm talking about anything from retail investors to some of the biggest fund players in the world. They're looking for hard assets generally, right? If it comes with an energy transition narrative, that's even better, yeah? And there was almost a fear of missing out element to that, in my opinion, to that copper rally, which I think you're seeing now in both gold and in silver, right? So they become their own momentum chasers. The gold, it doesn't apply, but the problem with copper is they chased it so hard, they actually kind of generated a sort of buyer's strike in the real manufacturing supply chain. It's kind of, okay, 11,000, that's too rich for us. We're deferring purchases and all that. So you actually created the surplus, which then washed into the exchanges, right? Silver could easily fall foul. I mean, these are kind of hybrid. You can treat them as an investment vehicle. And silver's a great example, but there is a proper physical industrial supply chain that goes with silver, right? You push that price too hard, that element of it is going to sort of like cut back on its purchases. So there's a quid pro. Gold, that doesn't apply, obviously, because it doesn't really have that. But no, look, I mean, hard assets in an uncertain world, are we surprised? No, not really, no. And I think when that investor search for a hard asset coincides with the energy transition narrative, so we're talking about copper particularly, you have quite explosive potential for price growth. And people go, oh yeah, copper at 15,000, copper at 20,000. Great, yeah, great if you're on the long side of that. But remember, every buyer in the world physically at that stage is going to hold back. No one wants to sort of if I was buying it for 10,000 last year, I'm going to go and tell my boss that I bought it for 15,000 this year. No one wants to be in that position. So, I can see a lot of tension between the investor rotation into hard assets, and gold is the leading indicator for that, and the world of manufacturing may not be ready for your bullish expectations of the gold price, the copper price, right? So there's a natural tension there. And I think we've seen that in copper this year. We saw this humongous rally in the Q2, and it's just went into complete reverse because the world's physical buyers went, no, we're not having that. Mm-hmm. And I think we just started off again, right? I mean, the move to 10,000, it grabs the headlines. The guys who missed out the first time, let's get back in again. Because everyone knows there's a good long-term story there. But so you're going to get this tension all the time between what investors are looking for from the sector and what the sector itself can actually take, right? If you push copper to 15,000, you can, I promise you, every wire manufacturer and buyer in the world is going to go, maybe we should have a look at aluminium, right? Yeah. How much could we swap out? How much could we, and that's a natural, supply chain reaction to any extreme price move, right? So that's, I think, kind of like the volatility I see ahead, because I have no doubt there's a lot of money looking into the entire commodity space, particularly metal space at the moment. The copper rally of Q2 was a full start. Gold's wasn't a full start. We'll see with silver, right? But for me, the way I look at it is, because I'm not a gold specialist, but they're leading indicators of investment desire for hard asset. Yeah? And we kind of understand. We look around the world that we're living in at the moment. Yeah, I completely get why people want to have hard asset holders, whether it's from talking about inflationary pressures or, our long-term inflation expectations may have changed over the last couple of years. Are we going to go back to zero interest rates? Probably not, right? But also look at the geopolitical uncertainty around, yeah? So it all for me, gold's the leading indicator of that. And behind gold, we're seeing silver, but that same desire, I think, we could see that in the industrial metals, but guys, just don't push it too hard.
It's hard not to. Everybody gets really excited when they see big green shoots on their charts.
And you get a good trend following market. I mean, that's the easiest market to invest in, right? I mean, you buy and hold. I mean, you don't have to be sort of like a PhD to work out how to play these markets. So the more they rise, the more money they suck in. Obviously, right?
Yeah. All right. Andy, thanks so much.
Oh,
Great conversation as always. We'll do it again next year. How about that?
Hopefully so. Why not?
Andy Home from Reuters, everybody. Great conversation. And that's a wrap here this week on the podcast from LME Week in London. And we'll be back Monday morning, regular scheduled programming. So have a wonderful weekend. Be well.